Hey, what's up, friends? I figured it's time to do a quick update. Since we've got so much going on, I just wanted to kind of give everybody a quick update and kind of my take on what's going on in the market, the real estate market. This is mainly geared towards homeowners and my real estate partners and real estate investors that I'm working with. So there's three main things that we look at that could possibly affect the market, and I'm going to cover those three things today. One is the forbearance that's going on. Number two that I'm going to talk about is interest rates, where they're at now and where I think they're going. And number three, we're going to talk about the inventory here locally. So number one, with the mortgage forbearance. So the government kicked over the foreclosure moratorium again until June 30th. So that means basically they're freezing all foreclosures. Nobody's going to be able to foreclose. If you look back at 2008, 9, and 10, over about a 5-year period, we had about 12.2 million foreclosures in the country. Okay, that was over a 5-year period. Over the past 12 months, we've had 10 million people go into this mortgage forbearance act, so where they don't have to make the mortgage payments. I personally think a lot of people would take advantage of that, really didn't need the forbearance and just took it anyways because, hey, if I don't have to make my payments, then I won't. Nevertheless, there's 10 million people have gone into this versus the 12 million over a 5-year period. So it's going to be interesting to see how the government responds to that, and if people are going to foreclose, or if they're just going to sell their house, or if the government's going to pass some sort of act to prevent foreclosures from happening. We don't know, but it's kind of the big white elephant in the room to see what happens. 3% of the forbearances were on conventional loans. 7.5% were on government loans like FHA or VA, and 9% of the forbearance loans out there were portfolio loans. Those were like bank loans. If your bank went outside of a normal conventional mortgage and gave you a loan, that 9% of those. So I think what you're going to see is, unfortunately, banks will retract again on doing portfolio lending because they're going to be the highest risk. Those are the guys that the banks are having to take it in the shorts on, so to speak. There is a report 2.1 million homeowners that are 90 plus days late on their mortgage. Once again, out of that, I think a lot of people will probably be taking advantage of it, but nevertheless, we've got a lot of people that are going 90-day lates on their mortgage that are possibly going to be hitting the foreclosure steps, possibly if they don't sell their house. But I don't understand why you foreclose right now anyways, because everybody's got so much equity in their house. I don't know why you just sell it. So will they hit the market? Who knows? That even if they do hit the market, we've got so much of a lack in inventory right now due to the demand that I'll talk about in a minute, that even if we did have all these foreclosures hit the market all at once, I think they'd get gobbled up real quick, and I don't think we'd see a dip in housing prices. Number two, so that was forbearance. Number two, interest rates, super volatile right now. The Feds, they're talking about doing Operation Twist, which is a quantitative easing to where the government has been buying long-term. The government's basically been buying all the mortgage-backed securities. So your mortgages are bundled up into packages and sold as a mortgage-backed security, and the government has been the one that's buying those. It's 30-year, pretty good return on investment. It's a 30-year money, but the government's talking about pulling back from buying the long-term bonds and buying long-term treasuries, which is a totally different investment. So if the government pulls back, that's basically the main reason why we've had interest rates have been so low for the past several years, is because the government has been the one buying up all the mortgage-backed securities, keeping our rates low. So if the government steps back from that, that's going to affect rates. Number two biggest thing that's going to affect rates is inflation. It's like the big white elephant in the room right now. The year-over-year inflation report comes out in May, and all the analysts are anticipating that our inflation is going to be up 1 full percent. So we're going to go from 2.5% inflation to 3.5% inflation. That's a big deal. It's a big deal for the market. So think about it. If you've got your money and you're wanting to make a long-term investment, stick it into a 30-year investment like a mortgage. So if you were going to buy a mortgage-backed security for the next 30 years, why would you go lend your money out for a 3.5% return? Because that's what we're loaning money out, 3.5%, when inflation is 3.5%. You're losing money. It doesn't make sense. So I predict interest rates right now, we're going to see them. I think 3.5% is going to be the new norm, where it was high twos, low threes was the new norm. I think the new norm is going to be 3.5. We may trickle up to 3.75%. But look, let's think about this. To homeowners, it freaks them out, man. When I'm like, hey, I know a couple months ago we were talking, I was quoting you 2.25% on your VA loan. Well, now the rate's 3.5. I'm sorry. Like that's the end of the world. But if you think about it, big picture, I mean, still, you get interest rates in the 3%. I mean, it's giving away money. It's not keeping with inflation. It's still free money. The government's going to have to raise the interest rates. Mortgage rates are going to have to come up. When will that happen? I don't know. It'll probably be a couple years. All right. Another thing, while interest rates are low, it's promoting a lot of buyers, and we got a lot of feeding frenzy. It's like I was joking with a real estate agent friend of mine today. It's like a knife fight if you're under $300,000. Like you just go and you want a hand-to-hand combat with 50 other people wanting to make an offer on the house under 300,000. But one cool thing is mortgage insurance has started to come down. So I had one client that I was quoting them $113 a month on their mortgage insurance. And then I went in and although the rates had gone up a little bit, I went in and repriced their mortgage insurance, and now it's $77 a month. So that was $36 a month savings. The same is the difference in interest rate. So that kind of made up for it. And also $36 a month, you may think, oh, it's not really a big deal, but really it's $8,000 more that I can pre-approve you for. So if you think about it that way, you can offer $8,000 more on a house and still keep the same monthly payment. All right, so that was interest rates. Just know they're super volatile. I wanted to show you a chart real quick if I can share my screen. This is the federal funds. Everybody asks me questions a lot when the feds changed the funds rate, and the government said they're not going to change the funds rate. So this red line here is the federal funds, and the blue line is 30-year fixed mortgages. So although you see a big dip right here in federal funds rate, the mortgage rates really didn't dip that much. So although the federal funds rates and the mortgage rates sometimes follow closely, they don't necessarily follow each other. Just know that that's the money that the federal government loans money to the banks. Okay. Here's another chart that I wanted to show you real quick. If you can see this thing. So 30-year fixed rates on 216 national average is 2.96%. Today, they're 3.45%. So a full 0.5% raise in interest rate. Okay. It makes a difference for a lot of people. All right. So the last thing I wanted to cover real quick is Nashville Inventory, Middle Tennessee Inventory. When I say Nashville, I'm encompassing entire Middle Tennessee in a general MSA. So our inventory, they say nationwide, they did a study, CoreLogic just released it. It said they did the study and they said that 11 million people are interested in purchasing a house, but nationwide, there's only 1 million houses currently in inventory. So we've got a huge crisis in inventory. National home price index is up 10%. So house price increase 10%. That doubled what it was last year. However, here in Middle Tennessee, I wanted to show you a chart that I think this one was from Google. They do such a good job of having analytics. So right now, the national or the average median price for Nashville area, MSA area, greater area is $305,000. Where are you going to find a $305,000 house right now without a bid war with 25 different people is beyond me. But the national is 269, so we're slightly above the national average. But if you see, if you just go back to 2004 when everything was booming real well before the market crashed, and then we had our crash, our Nashville market only really was still higher than it was before we had a huge increase, and we're so far above that right now. So basically, we're going to continue to see a 10% increase in prices until something big changes. I was meeting with a bunch of real estate investors yesterday talking about what could possibly change that would change our local market. And I said, World War III, I don't know. I mean, we've got so many jobs coming here. It seems like the worse the economy does, the more people want to relocate here to Middle Tennessee. Most of my buyers that I'm working right now are out of state, coming from California and other areas. So we've just got so many people relocating here. It's driving prices up. We've got such a demand in lumber right now. They can't produce trees fast enough to keep up with the lumber demand. And then we're getting all of our lumber now from Europe, and then Europe's got some bug that's eating all their lumber. So Europe's struggling keeping up with the high demand as well. So it's causing lumber prices to go up. And some may say, well, when's the lumber prices going to stop going up? Well, when builders stop paying $8 a stick, is when lumber prices will go down. And when will that happen? When the demand stops. So right now, we've just got so much demand pounding the market. I don't know what's going to slow that down. So hopefully this has been insightful. Hopefully this helps you educate your clients and educate yourself. I'm here to help if I can help you guys in any way. Thanks.